I'm a trader. I'm trading. Well, that's for you. For me, I am investing. Are you a trader or an investor? Or do you even know what you are at all? In today's video, we're going to be discussing this further to really understand the differences, what they are, and how to make you work for you better. I'm Sylvia, and if you're new to this channel, welcome. If you're a returning subscriber, welcome back. I am really happy to have you here. In this video, we're just going to be discussing trading and investing, and to know which one where you currently sit and which is better and how does it add up in your whole financial portfolio space. In this financial space, trading means buying and selling stocks quickly. It can be days, it can be weeks, it can even be minutes, so they're always they're always monitoring to understand when to buy and sell a stock immediately, as soon and as quickly as possible. While investing means buying and holding the stock for a period of time, usually long term, like you ride with the company, you're there chilling with them, understanding their stock, their business, investing gradually over a period of time, usually a long term, really, before you now finally sell or earn dividends from it. Both of them, you can make money from both of them, but their game strategies are very different. So let me speak about them in these categories. The first one will be the time frame. It can either be short or long. Short versus long. So a trader, you'd always have to watch your market every day, because you make your profit from the market swings. When it's going up, when it's going down, you make your profit from the market swings, watching it daily. Yes, these days there are now applications, there are AI bots that help you to place your stock and automatically close out to make some profit, but then you still have to be actively involved. That's why you'd see some traders, they'll just have like big screens that they're always looking at. They're tracking this market here and there, watching the different stock prices to know when to close and when to enter a particular trade. But the investors, they watch the business, they listen to the market trends, they go in and then they usually buy small in bits and gradually over a period of time, over a long term. So they don't really have to sit down and start watching the trade, the stock, how it goes on a daily basis. That's not for them. If you are not watching the stock market, my dear, you're not a trader. You are just an investor, and that is fine. Just know where you are and know what works for you and stick to it. Baby, that is fine. The second one is their risk and reward. So for traders, it is usually very high risk and high potentials as well. You can actually make a lot of money with small amount of money when you're a trader, and of course you can also make it to big amount of money, but the same way is very juicy, that you just enter the market with say $1,000 and before you leave you're getting 1,500 in just a few hours. That same way you can lose the $1,000 to maybe 200 or even nothing in minutes, in nanoseconds basically. So trading is very, very good in terms of the high rewards that you can come, but don't forget the high risks that are also associated with it. The other part, investing, requires slow but steady kind of inputs, and of course in the long run you also get some good rewards, especially when they are good companies. So let me also note that you can also invest gradually and slowly over time and still make losses. That's why it is stock, and it can go both ways. But for trading, it's usually faster. You already know where you are. You can even cry immediately. While for investors, you have invested and maybe you're hopeful that in the next 5 years your $1,000 is going to be say $5,000 or $10,000, but then in the 5 years you wait all along and then you now have maybe zero or $10 basically. It's going to be very, very heartbreaking. You would have used that money over time to do something else. So both of them have good interests, both of them have risks associated to them, but they also require some unique skills. For each of them, you have some unique skills, you have some threshold, mental threshold, psychological threshold that would help you to pull through in whatever whether trading or investing, whatever you decide to go for. For the trading, right, they have different trading strategies, different trading styles that traders adopt to help them understand and flow in their trading journey. Number one is the day trading. So these guys, they buy and sell on the same day. They usually require very high focus because they want to close out on a deal that day and make good profits. So day trading is number one. The second one is the swing trading. So these guys, they usually hold their trades for days or weeks. They just catch on the short trends. So that's what they do for the swing. It's more like a swing. They just hold on and then pick their profit and move for a while. Hold on, pick the profit and move for a while. The third one is the position trading. These guys are usually in between the traders and investors. They hold on for months sometimes, and then they quickly take their profit and then they move. But it's usually not as far as what an investor is going to hold, and it's not as short as what a day trader is going to hold. So those guys are just staying in the position. They're just waiting anchor positions to know the next move to take, but they're not very fast, neither are they too slow to make those decisions. For instance, imagine buying Dangote sugar when the prices go down, and then when the prices go up, you just sell everything and make your profit. So that's something a positioned trader can do. So let us give an example. Person A is a trader and person B is an investor, and they both are investing in the Zenith Bank shares. Let's say that the Zenith Bank shares is 72 naira as at today, right? So the trader is going to go in, and then if it's 72 naira today, he will go in, and maybe in the next 5 to 6 hours it becomes 76 naira. They'll just go ahead and sell, or maybe in 2 days or 3 days time it becomes 75 naira. They'll just go ahead and sell, take their profit and go. But an investor would wait over time. An investor would wait for months, for weeks, for years, and even while waiting, take their dividends, understand the market, and then maybe at the end sell at 100 naira. So this is just the difference between both of them. They are going to make profit, of course. That's if the market is good at this time. They'll make their profit at different times. Another thing you will notice is that the day trader sometimes could have made a lot of 2 nairas repeatedly, as against what the investor has waited so long before he got to 100 naira to make the same profit. So, but then of course, all of these things depends on the kind of risk appetite you have and your kind of trading strategy too. That brings me to this: who should trade and who should invest? So for you, if you should trade, I would think that you should have some time. You need some time in your hands because you need time to track and monitor the market. I had a very terrible experience with something like this when the Luna crashed. I can't stop talking about Luna because it was really, really a trying time for me in my crypto journey, right? It's going to be a discussion for another day, but I'll keep giving you people nuggets on what had happened. I had just entered the market, and in the nick of time, I was very busy with something, and then boom, what I bought just went down. So the dip, it was actually dipping. It was going down. I didn't know that the UST arm had broken at the point, and I didn't have time to look at the market to really understand what's going on, what's driving this news, what's driving this low prices. I just went in, and then going in, it didn't come back. It was just getting worse. It was just going down, and it still never came back till today, right? So you need to know how to have the time to study the charts, have the time to understand daily charts if you want to be a trader. Have the time to study and understand the market. The daily charts, the dip, the green line, the red dips, how it affects what and what affects it. Have time to study the charts if you want to be a trader. Secondly, you should love making quick decisions, and you should also know how to listen and study the news for you to be a trader. These things, decision on the go, on the feet, and then knowing the right places to get your information and news should be a major driver for you. Thirdly, you should be able to have enough risk appetite to handle fast wins and fast losses, because the way it comes in is also the way it can go sometimes. So you should have enough stamina to handle such risk and such volatility. But please, if you don't have time on your hands to start studying the chart or understanding what to trade on every day, if you like steady growth, slow and steady, they say wins the race. If you prefer dividends and long-term plans, just stick to investing. Stick to being an investor, and that's still very, very fine. So some tools you need as a trader: you need applications like MT4, TradingView, forecast with live feeds. So these applications will help you see good charts, understand the charts, and know how to make your decisions from charts. For investors, you need research tools like company reports, like annual statements. So but either ways, Bamboo is also a very very good one for both of you. Through Meristem are also good platforms for both the investor and the trader. So just check them out today and help yourself. Are you a trader, an investor, or both? Let me know in the comment section. Where do you stand? Which one are you? Did you know before now, or you're just figuring it out what the differences are? I also want to hear that in the comment section. And have you subscribed at this point? Please, I hope you have, and liked this video. Yes, I hope you have. I am excited to respond to your comments in the comment section. I am Sylvia again, and I'll see you in my very next video. Bye.